You are watching Market Watch, the brief overview of the key events from the world of finance. Recall that the current week is not only the last of the month, but also the quarter and the first half of the year. Therefore, many investors will not only take profits on good deals, but also prepare for the second half of the year. It is important to note that towards the end of the year, most experts predict a reduction in the key interest rate by the Federal Reserve. At the same time, it is important to understand whether this will happen in September or December. To do this, investors are closely monitoring the change in the growth rate of inflation, which is gradually slowing down. Thus, it becomes obvious that inflation remains one of the key indicators. It is for this reason that all investors' attention will be focused on the change in the basic price index of personal consumption expenditures in the United States. But since this release will take place only on Friday, attention should be paid to the labor market data. After all, a further increase in the number of initial jobless claims in the United States will also increase the likelihood of easing the Fed's monetary policy. Anything that slightly increases the chances of 2 Fed interest rate cuts this year supports the stock market and puts pressure on the national currency. Now let's move on to the oil market, which has been growing surprisingly steadily for 2 weeks. Recall that several factors contributed to this at once. First of all, the summer vacation season in the USA is in full swing. Secondly, the key US stock indexes are actively growing, thereby supporting the demand for oil. And unfortunately, the geopolitical situation in the Middle East is far from stable, which also contributes to an increase in interest in this market. There are no obvious prerequisites for a change in the situation, therefore, it is not necessary to count on sales yet. I would also like to say about Bitcoin, which remains in the red zone, but I can't. The situation in the cryptocurrency market remains ambiguous and looks more like profit-taking than sales. Bitcoin continues to trade in a wide sideways range between 60 and 70,000. And at the moment, there are no objective reasons to panic, although they are also difficult to find for aggressive purchases. After all, even despite the significant growth of key US stock indexes, demand in the cryptocurrency market remains very weak. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.